Well, global cues pointing negative at the moment. When we look at US indices, they close sharply lower in trade on Thursday. In fact, the Dow and the Nasdaq clocked their worst days of calendar year 2022, and this comes after a day when all three US indices clocked 3% odd of gains. So Wednesday saw US indices see a sharp surge after the Fed broadly, or rather one Fed statement which said that they will obviously consider the 75 basis point hike, but it may not be necessary, is what the Fed had outlined, and that led markets higher. However, all of those gains have largely been reversed, and there's a full reversal which is in play. In fact, the dollar index has gone up, the US 10-year yields have also gone up, and indices have come sharply off. When we look at the tech stocks were the worst hit, with the Nasdaq down nearly 5%, 4.99%. The Dow closed 3.1% lower, and the S&P 500 was down 3.6%. Mind you, the S&P 500 is still up week to date, around 40 bips, clinging on to that 40 bips of gain, but down 3.5+% only in a single day, which was on Thursday. Despite this fall, US futures are still in the red. So there is no recovery currently in play or in sight. When we look at European indices as well, they closed largely lower as well in trade yesterday, except the FTSE. So when I'm looking at Europe, well, the FTSE was up around 0.1% or thereabouts, but when you look at the stock 600, down over 2/3% in trade yesterday. Of course, far more tempered than those US indices, but Europe was in the red as well. When we look at how Asia therefore has opened in early trade today, the Nikkei is holding on to just about the absolute flat line. It's in fact down 5 bips as we speak. However, all the other indices have really sunk. When we look at the ASX 200, down 2.7%, the Kospi down almost 1.5%, and when we look at the Shanghai and the Hang Seng, both down over 1%. The Shanghai is down 1.5 almost, and the Hang Seng down over 2.5%. So clearly negative cues coming out of Asian indices as well today. When we look at the SGX Nifty, down nearly 1.5% in very early trade, of course. And when we're looking at how commodities are playing out, well, oil is holding on very well above that $108 a barrel mark. Mind you, the EU has been considering an embargo on Russian oil, and that's obviously leading to some pressure on oil prices going up sharply. It's in fact nearly at $109 a barrel as we speak. Gold has come off its highs. Gold is down to around $1,870 an ounce, and when we're looking at the US dollar staging a solid recovery, it was well below that 103 mark yesterday when we were speaking at this time. It's well above the 103.7 mark as we speak today. So the dollar is really surging at the moment, strengthening very sharply, and of course that is led by a solid surge in bond yields. The US 10-year yield has now gone up above that 2.9% where it was yesterday to 3.07%. So gaining sharply is that US 10-year yield, and of course that obviously will lead to a reversal in gold. So gold is, as I did mention, $1,870 an ounce, and this is what is leading that. When we look at cryptos, absolutely beaten. Cryptos are down. In fact, we're looking at Bitcoin staring at almost an 8.5% downtick on Bitcoin. It's just above that 36,000, or rather just below the $36,500 mark, but broadly negative cues. And when we're looking at India, we're looking at a gap down start in trade today.